All right, let's get back to our guests for the second half of this hour and turn to Aaron Smith once again, a Superfund. And Aaron, before we went to break, we were talking about commodities, and I really wanted to get your thoughts on sugar prices. You see the technical chart already on the screen, but you think that sugar prices are going to retest 1974, 1979 highs in the next 5 years. That's more than 60 cents a pound. That's pretty astounding because most analysts and investors, they're more bullish, forecasts have just been for 40 cents. So it seems like you see a lot more drive for this commodity than other people. Why?
Well, Susan, it's just common sense. It's not just the fundamentals for sugar. It's also the fundamentals for the U.S. dollar. Dollars will be worth next to nothing. So for sugar to be 60 cents a pound won't mean very much because dollars won't be worth very much. So that's one reason why sugar will go and retest the highs in the 70s. If you look at the technical chart, you can see that there was a nice trend line. There was a trend channel where the sugar price sort of broke through. Then it hit and broke that all-time high at 22, or its previous high, and that became the new support level. We're now testing that support level. We're testing the 50-day moving average, which is a little bit bearish. But we do see support, I think, probably at $19 to $20 for sugar. We continue to maintain long positions in sugar, and if it reverses, we'll just stop out and wait for the next trend. I mean, we're happy to trade long or short, but in the long run, I think sugar, like most commodities, will get more expensive, especially as valued in dollars.
Well, you said like most commodities, they should get more expensive, but you're still bearish on the likes of corn and wheat. I guess, why did you think these two commodities in particular are going to underperform?
Well, we're a trend follower, and there's been a very nice downtrends in corn and wheat over the past couple months. We've been able to take advantage of those positions. Bear in mind, these are trading positions. This isn't a long-term buy and hold. So I think in the long run, corn and wheat will get more expensive. By 2050, I think 15% of the arable land in the world will be unusable because of global warming. So commodities will eventually get more expensive. But as a trading position, corn and wheat this year have been weak. I mean, they rebounded last week, but we continue to maintain short positions in those two particular products.
Okay, Aaron, one more question for you. I got to get to equities at this point, and your equity exposure, of course, is via these index futures, and you're long on Asian stocks, but you have stops in place. So can you tell me, I guess where these stops are placed?
Well, I can't tell you where the stops are placed, but there is an uptrend in equities. There's not a lot of volume to support that uptrend, so I think it's kind of weak. But we can take advantage of the upside. I think in Singapore we would call it a kopi kaya market. It's a sugar and coffee market. It's all driven by stimulus. Like coffee and sugar, eventually it will pump you up, but if you don't take enough of it, eventually your body will naturally fall asleep. Same thing with the market. Once you take away the massive stimulus, we've seen $12.8 trillion from the United States alone. Once you take that stimulus away, you're going to see the sugar high sort of fall from the equity markets.
All right. Okay,
so
Aaron, nice talking to you today. Really appreciate it. We're out of time, unfortunately. So there you have it. Thank you for that. Aaron Smith of Superfund.